Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com, and it is Wednesday, February, add a few, July 6th. First, just before I get started, members, I goofed up the strategy session, and I had it like this, so you can only see here instead of the ticker. And the reason that's important is because without this, it will not have clickable tickers, so you can't. And by the way, if you're not a member and you don't know what I'm talking about, listen up. So you won't be able to click on the ticker on the video page and just be taken expressly and directly to the ticker that you want to see, the part of the video that covers. So you still have the fast version, so you can listen to me twice as fast. Get your stuff done and get on down the road, but you won't be able to use the clickable tickers for just this one time. I apologize for that. Okay, back on track here. I want to show you a couple things here. First of all, on Whole Foods, I've covered this before. That was a really bad box here. I've covered this before about trends, and this is in a trend. Not in a downtrend, not in an uptrend. It's in a sideways trend. But you can see what's happening. This is resistance right around 35-ish, the mid 35s. Support down around 29-ish. This time around 30. Now, this, by the way, is a key thing. Okay, before it had been testing these levels down here. This time around, after printing a new high, relative to this last high, it's looking like it's printed a new low, a higher low. So now what you're looking for, first of all, is you're looking for a move to here and then a move lower. It's called expect the expected. You're not looking for this. Probably happen eventually, but for now, you're just looking for a move here. And then if you're long the stock, you put a tight stop on it. And if it breaks out, great. If it doesn't, well, aren't you glad you had a tight stop on it? But the idea is this is in the center of the range, so it's not really actionable. So this isn't a, hey, I got a free trade for you video. It's a, hey, let's look at some analysis here. The 50 and the 200-day moving average are moving sideways. This is an oscillating base. This has been basing all of this year, started in the fourth quarter of last year. This is a pretty firm, strong base. But I want to show you how you can be trading this type of thing using simple stochastics. This doesn't work worth a darn when stocks are trending. Stochastics will always be overbought during uptrending stocks and always be oversold during downtrending stocks. That's the way they are. But they work really well in these choppy base building processes. And you look down here, like at this line right around there, and then another line right around there. We'll call it the 80-20 lines. Okay, so here's the deal. When the stochastics, measures of overbought and oversold, when they fall below this line, don't do anything except watch. You see they get oversold. And then at some time later, and this is a few weeks later, they cross above. Buy it. When this gets up here, above the resistance line here, don't do anything. Watch it. When this starts to peter out and you see the price start to drift lower, you sell it. You could wait if you want for the stochastics to be moving back down, and that's fine. But if you just got the regular price pattern and you see this resistance here, you do just fine with that. You sell it or you short it. Okay? That's about at least a 10% range. Maybe almost 20, you short it. And then when stochastics, after it gets oversold, see here it's getting oversold, don't do anything. You're not buying it, you're not buying it, you're not buying it. Maybe here, sure, you'd have gotten faked out. Okay, this is called trading, not winning. Back down, breaks out again. This is your signal to buy. Stochastics that were below the 20 line are now moving back up. That's your indication to buy. Overbought, don't do anything. Stochastics down through this line. Now it's time to sell. Lather, rinse, repeat. So where are you now? Well, stochastics are still moving up. Okay, so you wait for stochastics. You wait for this blue line to go above this line here, the 80 line. And then once it starts to roll over, then you would sell. If it doesn't roll over, then you stay long, and there's your breakout. Okay, that's it for this video. I hope it helps. Look, these stochastics work. By the way, so do a lot of other technical indicators. We're going to be starting a list. We'll call it an indication of interest for early registration. I'm going to be teaching a course over the next couple months. It's an online course about essentially applied technical analysis. We're going to learn all about these various indicators from MACD to stochastics to exactly how we use moving averages and trend lines, Bollinger Bands, Donchian channels, Keltner channels. Gosh, I could go on and on. Accumulation, distribution, money flow. We're probably even going to do some Fibonacci stuff, all kinds of stuff, and not just how to look at it and talk about it so that you can be a hit with your friends, but actually to put this stuff together so that you can put a money-making formula together. I'm going to do that class this summer, and it's going to be an online class. Gary, my brother and business partner, is going to probably be kind of ticked at me because I didn't tell him I was going to mention this. We just started talking about it today. We do have some calendar dates set aside, but those aren't for publications. It's going to be a class occurring over multiple weeks. Multiple weeks, not like all day long or anything like that. It'll be in bite-sized chunks, an hour or two at a time. So I want you, if you're interested in that type of thing, what I would suggest you do is email, I'll do it, he's really going to be mad, Gary@stockmarketmentor.com, and have the subject line be, dude, I'm interested. That's all, just dude, I'm interested. And what you're going to get is, you're going to get placed on the list for early registration. Because this will be in webinar format, there will be a limited number of seats, and because the price will be exceedingly reasonable, we will sell out. So you'll have a chance to and don't fret about it. Oh, what if I'm away that day? Don't worry about it. You're getting plenty of information in advance. You'll have an opportunity to get in there. But I want you seriously to do that. If you're really, really busy this summer, this is for you, because you can basically do it anytime you want, because yes, you will be able to download the product. You just won't be able to be there live for the question and answer after each session. If, on the other hand, you have nothing to do this summer, it's perfect for you too, because you can do it anytime you want. So it's really good for everybody. I've gone on too long right now. I'm just telling you, email Gary@stockmarketmentor.com. Dude, I'm interested. He'll get it.